50 basis points, and this market is now set for the eventual bull market. Is it too late to jump into this market? Where are we heading from here? We got loads to get into. First of all, smash up the likes, guys. We've got our first rate cut in 4 years. This is a meaningful moment, and if you're in this market right now, shout out to you, props to you. You've got the opportunity to invest at the start of a rate cutting cycle, which we know when Fed officials start cutting, they continue to cut, and even do some quantitative easing, which is where they print money into the economy as well. So now is the time where you want to be getting into investments. Now is the time, historically, if you look at the data, that you start to see stocks, you start to see luxury watches, you start to, of course, see crypto start to boom into its bull market. So we're going to break down exactly what this huge announcement means for the crypto markets. Of course, a big day here in the markets today. I mean, if you look at the candlesticks, you're seeing nice green candles. I mean, 3 days ago, 3.6%, yesterday, 2.3%, and today as well, 1.8%. Now, we did speak about in the last few days that I expected liquidations to both sides, and you got exactly that, right? Right after Jerome Powell started speaking, boom to the upside. Then it went back down to the downside, trying to flush out all that liquidity. But you just need to zoom out. Just need to zoom out and understand what is going on here. Fed has indicated a 50 basis point cut. Now, if you remember in the lead up last week, I shared the following. I said, guys, this 50 basis point rate cut is going to be a double-edged sword. Markets will be happy because that's what they started to price in. They wanted Jerome Powell to get ahead of the curve. The problem, however, will be the fact that they will start to now wonder and think, is there something wrong with the economy? Is the labor market broken? Are there growth concerns? What's the reason that Jerome Powell, who's been so tentative, has decided to do a 50 basis point rate cut? And this is now what's going to go through the market. So this market is going to be on edge. Yes, it's going to be exciting because we've got the 50 basis points. We're expecting at least another 25 basis point in the next meeting. And if we jump onto the Fed rate monitor tool, you can see that for the next meeting, 70% of pricing in one cut and 30% of pricing in another 50 basis point cut. You can see, like I just shared with you there, fear and greed index has jumped back up. We're now in neutral territory, 49, and people are starting to feel buoyant about this market. But remember, if data comes out that suggests there are growth fears, that suggests that maybe the labor market's a bit deep, we may see some dumps. Now, longer term, I couldn't care less about those dumps, right? I can't, fundamentally, this is the moment where rates will start to be cut. We've not seen a rate cut in 4 years. So for me, to keep it very binary and simple, this is the time I want to get in the market and stay in the market. I've been saying that for a while now. I want to be in this market. And if we see opportunities to buy the dip, I will get into those. But fundamentally, what I want to see from Bitcoin now is fight this key level. This key level of support / turned into resistance between 63.4 all the way up to 63.9. Let's get above it. Let's get above it because we got rejected last time. I want to see us get past that and start working our way up towards 68,000 and testing the top of this big bullish continuation pattern. Now, a lot of you guys were asking me, why did I not stream yesterday? Well, the fact of the matter is I was going to stream the FOMC meeting, but the problem with crypto Twitter is everybody just seems to be streaming the FOMC almost like it's a novelty. You guys know I've got a commitment on this channel. I'm not just doing stuff for views. I want to bring you guys the data that other people are not bringing you. And when I started doing this years ago, when nobody was covering FOMC meetings, nobody was even looking at the macroeconomic data, I was sat here with a couple hundred of you guys watching these live streams and analyzing this data. And ultimately, that's what I want to bring to this community. I don't just want to be doing the same clickbait view stuff that everybody else is doing. Oh, look, everybody, 20 different channels are streaming Jerome Powell's press conference. I couldn't care less about that. I'd much rather bring you the data that matters. And in this case, that's about analyzing what Jerome Powell did. And the analysis, which I came to the conclusion on overnight while I was thinking about it, was look, this can go either way. One, it's great that we started the rate cutting cycle, and we should focus on that. That's going to ensue our big cycle to the upside. That's what I believe in. That's my thesis. At the same time, my mini thesis is that, hang on, they're going to be a little bit, market participants, will be a little bit worried about why Jerome Powell has done it. So they're like, okay, great, you've given us the 50 basis point rate cut we wanted, But why? Have you broken something? And we spoke about this last week, right? It's this kind of Goldilocks. They want it perfect. They want it to do 50 basis points and everything be okay. Now, Jerome Powell did in his press conference, say that things are okay and he doesn't see any signs of recession, etc., etc. But the reality is that doesn't match with his action, because his action was to do 50 basis point rate cut. Why? Now, the next meeting comes up on November the 7th. No doubt we will be keeping a close eye on that. And the question is going to be, does he do another 50 basis points, right? Like, does he continue to keep front-loading these rate cuts? Because ultimately, look, 125 basis point rate cut here or there doesn't make a difference. But when you gradually pile on these cuts and you start bringing the Fed funds rate down from the 5.25% down to the 4%, and eventually, at some point by December, you can see that we start pricing into 4%. And then when you go into next year, January, you'll start hitting the 3 handles on the Fed funds rate. It starts to have a meaningful impact on people's purse strings. Right? Suddenly their mortgage payments a little bit less. Suddenly their car finance payments a little bit less. And they've got a couple of $100 left at the end of the month for them to make some investments. And some of those investments will go into stocks, some will go into luxury watches, some will go into gold, some will of course go into our friend Bitcoin and altcoins. And this is the thesis around global liquidity and making sure that the money supply is picking up so that people can make investments. There's so much trading you can do, but the reality is crypto is only going to grow when total market cap grows, right? And if you look at total market cap, which is sitting at 2 trillion here, we are still off our all-time highs. Let's just zoom out here. You've hit all-time highs of 3 trillion in the past. Now we're sitting at 2.1 trillion. So we're a long way off of even seeing more crypto than we've seen in the previous markets. We saw it previously, we've seen 3 trillion. So the thesis around the growth of crypto will come when there's 5 trillion, 6 trillion, when we start hitting numbers much higher than this up here in terms of the amount of money flowing in crypto. Now, part of that's going to help is our good friend in the Bitcoin ETF, right? The fact that we're now going into this bull market armed with ETFs, armed with the likes of the Bitcoin ETF, the Ethereum ETF as well. This is good news. I mean, we're still seeing inflows come in. On 17th of September, we saw $168 million flow into the Bitcoin ETF. And this is going to help us in this bull market. This is what's going to make this bull market different from others, because we have mechanisms to allow people to invest in crypto a lot easier. Exchanges have become a lot better. They're a lot more mature. KYC requirements are a lot more mature, more established, less risky, less hacks. This is good. The crypto industry is maturing, and that's going to allow more money to flow in during this bull market. And ultimately, that's what we're excited for. So coming back to Bitcoin, continue to stick to this pattern that I'm observing here in terms of the big bullish continuation pattern. You can see it here on this weekly chart. Really good setup. I mean, if you look at it again, like I've explained before, we went up to 64, collapsed. Went up to 69, collapsed. This time we went up to 74, and we've just consolidated nicely, showing some really good strength above 60,000 here on Bitcoin. And it's almost like Bitcoin wants to use that 60,000 price as the launch pad. It's from here that we can use it as a base to mount attacks at 70, to mount attacks at 80. And ultimately, that's where the exciting returns are going to be. So if you want to trade with me, I'm taking active altcoin trades inside my Telegram group, ijazcrypto.com/TG. Jump inside. The link will be in the very first link in the description. Thanks for watching, and I'll see you in the next one.